All right, so hello everyone. Good day. So before I proceed with the discussion of the merchandising corporation, I would just like to appreciate everyone's messages. There are people, there are students, trainees who have been sending me a message via Instagram, Facebook, that they're using my video for as a review for the upcoming exams. And congratulations, of course, for those who passed the exam. So for those who will take the national assessment, feel free to use this video as your reference in the upcoming national assessment. Once again, thank you and congratulations everyone. So, in this video, I'll be discussing the merchandising corporation, particularly the BC Trading Corporation. So, once again, just like what we did last time in the partnership service problem, I'll be discussing the entire bookkeeping end-to-end process from journalizing transaction to posting transaction, preparation of worksheet, financial statements, and closing entries, and of course, the post-closing trial balance. So, if you feel like that I speak faster than the usual, you feel free to, utilize the speed button feature of YouTube. Make it slower, or if you feel like you wanted to, watch it on a fast forward facing, that would also do. So I'll just, keep on discussing on my own pace. So yeah. So let's dig in with the problem first. Of course, we have to familiarize ourselves with the problem that was given us, right? Okay, so in January 2022, Ivy, Esther and Company form a corporation registered with the Securities and Exchange Commission, or SEC, under the name of BC Trading Corporation with authorized capital of 500,000 pesos and with paid up capital of 300,000 pesos. BC is a VAT registered entity with the Bureau of Internal Revenue engaged in buying and selling of merchandise with a store located in Baclayon. The corporation prepares financial statements on a monthly basis, hence, it prepares adjusting and closing entries at the end of each month. So, just like the previous problem, BC maintains the following chart of accounts. So, here are the chart of accounts or the account numbers along with their corresponding account titles. So, basically, these are the accounts that are being used by this company. Okay, do not be confused. This is just like the general accounts or list of accounts that they are using. Okay, it really depends on the company. Okay, so now let's move forward with the additional information. Do not forget to read this one. Okay, the corporation's accounting policy includes the following. Number one, the corporation uses special journals. So just like the previous problem in partnership service, although there's only an additional journals and subsidiary ledgers, which is very, very much easy to understand. So as I'm saying, this corporation uses special journals to record service revenues, cash receipts, and cash disbursements, in addition to general journal. It also maintains subsidiary ledgers for its clients, and we now have the suppliers or creditors. Depreciation, number two, on office equipment is 10% per annum based on the store and office equipment balance. Okay, so number three, purchases of supplies are immediately charged to expense. Number four, merchandise inventory at September 30 or the ending balance is 159,600. So take note of the following. So I highly suggest that if you haven't watched the partnership service, the first video I created, much better if you could watch it first, then you proceed here in merchandise inventory. So you would easily catch up with the terms, with the process, informations, details that you need to know. Okay? BC post-closing trial balance as of August 31, 2020 is as follows. So here are the following accounts that we need to transfer in our general ledger first. So after reading the problem, of course, we have to cut out everything, cut all the source documents. Once you're done, you have to arrange it by date and then by series. Okay, so by that, I'll show you what we did Okay, I have here of course, the correct answers already, which will I show you later on. So let me just split my screen here so you could see the source documents arranged by date and arranged by series. Okay, so once you cut out everything, once you're done doing that, okay, assume that you did this. Okay, so we have the September one. Take note of the date. Let's go back. Take note of the date here. So August. So August 31, 2020. So the next date, or the date that we're gonna use for recording transactions, is September, August, and then followed by September. That's why you have September 1, 3, 4, so on and so forth. So once we're done cutting out the source documents, we were able to arrange it by date. So we now have September 1 here, September 3 transaction, September 4, 5, 6, 8, so on and so forth. Okay, and then you will see here at the back, okay, on the last part here. So once you arrange it physically, you have to print it out. Class, you have to print it out, the problem, and then cut out the source document and then arrange it by date. At the back of that, you'll have this source documents. You'll notice that it is dated October 5. So you will later know how it affects the financial statements. Okay, so these are basically the accounts, or the statement of accounts, that we were able to receive the following month after September, which is October technically, but we have to record it in September books because it pertains to transactions that we incur in September. Okay, I hope that is clear. If you don't get it, just play back the video. All right, so once you're done arranging it by date and by series, we can now start, okay, posting all the beginning balances. Let me just take a look at the balances here. Okay, here we go. So first thing you have to do is to post everything in the general ledger. Okay, all the beginning balances. Do not forget that. If you forget all of these accounts, it will automatically makes your paper incorrect. Okay, you wouldn't arrive at the correct balances. Okay, you have to put the beginning balances first. For cash, we have this. I'll just put it on bold. Okay, for accounts receivable, we have beginning. So for the dates, of course, you can just you have to follow the TESDA format. You will start at the first transaction, first line item, with the name of the month, September. The following transactions shouldn't have any name of the month. Okay, just the dates like this. Okay, so for December 1, beginning balance is 266 thousand pesos. For AR, we have 33250. Okay, same thing here. Merchandise inventory, we have 133 there. Next is input VAT. We have the beginning 15,960. Take note that I'm trying to bold all the transactions that we are, we're done posting in the ledger. Because technically, these are the correct answers already. That's why it's finished. I'm trying to just bold the transactions I am explaining so that you could follow. Okay? Next, store equipment. We have here the beginning balance, 159,600. And then we have the accumulated, again, per non-current asset, or per NCA, we have a separate accumulated depreciation. Okay, because we have different computations per assets on how we will depreciate it. That's why it's separated. So for the office equipment, we have 107, 730, and then 7182 from here. I'm just basically following all these accounts from the top to the bottom. Okay, and then accounts payable, we have 39,900. Withholding tax payable, we have 1,064 here. Expanded withholding, we have this balance. And then SSS, we have this amount. For utilities payable, we also have the beginning balance of 5,054. The output VAT, none. We don't have a beginning balance. Next would be after utilities, we have ordinary share per capital. We have 399,000 pesos for the beginning balance. For the retained earnings, which technically is the net income, the net loss, yeah. We just use the term retained earnings because this is a corporation. Excuse me. They're no longer in the partnership. Okay. So once you're done posting all your transactions, if you'll notice all the highlighted items says here, it's a beginning. It's a beginning balances. Once you're done with that, you can start posting now your transactions. I mean, like journalize it each per date. Okay. So September 1, let's start with this one. Of course, when an invoice is issued to us, again, the name of our company is BC Entrep Corporation. In this transaction, we are the customer. So if we were invoiced by MES Incorporated, okay, that means we have a payable to them. We order the products to MES Incorporated, but we haven't paid them yet. So in this case, we have to put it in the so-called purchase journal. You see, we have the similar journals in the previous discussion that we had. It's just that we added some. Just like this one. For revenue journal, just a quick review. In this journal, we post here the transaction or record here the transactions pertaining to our revenues, the services we rendered, but our client did not pay us yet. Okay? In this case, it's the opposite. We have the supplier, we ordered something from them, they gave us the goods, but we haven't paid them yet. So it's a purchase journal pertaining all the purchases on account, meaning it's a liability. All the purchases that we've made, okay, whatever that we purchased, as long as we did not pay for that one, the same day we will record it in the purchase journal. Cash receipt, technically all the cash that we received, and then same here in the cash disbursement, all the payments that we've made, like cash outflows. And then we also have the AR subsidiary ledger. So every time a company or our client did not pay us, we record it here. When they paid us, we record it here as well. Okay? And then there's this additional AP. Since we have AR, accounts receivable subsidiary ledger, we have this AP or accounts payable subsidiary ledger. It's just basically the opposite of AR. So in this case, here are the list of the suppliers we haven't paid yet. Okay, we purchased something from them, but we haven't paid them yet. Okay, so this is where we record everything. We update it. Okay, so all right, let's proceed with this one. So, and this transaction again, this should be recorded under purchase journal because we paid. I mean, we ordered something from this company, but we haven't paid them yet. So September 1, the date is here. Invoice number is this one. Account debited is this one. Okay, this is the name of our supplier. How much did we purchase? It's all breakdown here. Amount is 159,600. Input VAT is here as well, and then accounts payable. Actually, for the file, you could ask personally a copy from me. Just let me know if you need it. So it has the formula, okay, already when you receive the file. Okay, you will see it here. How did I get this? How did I get this? Etc. All right. So once we're done recording it, let's proceed with the transaction. Easy as that. Let's take a look at September 3. Okay, sales invoice number 798. Customer is Rainbow. Since we are the one who issued this, that means it's a revenue on our part, meaning we invoice our client. We provided the goods already, but they haven't paid us yet. So we just have to record it here, September 3. Invoice number is here. All the details are there. Name of our client, Rainbow Incorporated, and then sales credit. So sales is amounting to 199 500 pesos. Output VAT is also here. And then how much they owe us. So the total is 223,440. The same here, right? Okay. Next, Uh-huh. In this case, we're the one who issued the check voucher in this case. Okay, just like the usual. You see, we have the check voucher, we have the check, so we also have the OR. Okay, that means we paid something. Okay, so we bought September 3, we bought something from the NBA bookstore. We bought office supplies. So check number is here, check voucher number is here as well. Let's take a look at the accounts. In the column side, purchases, salaries, SSS, withholding. There, we have the supplies expense. Amount is 1,995 rather. VAT is 239.40. Total is, okay, this one. I hope you guys could follow. Anyways, you could just pause this video if you want to and just continue it, okay, in your own pace. Next, we have September 4. So I believe this is an additional source document. If you look at the name of the document, it says receiving report number. And we are the customer. That means we bought something from Mess. Remember? We bought something from Mess. Okay. By the way, since we have recorded, okay, let me just go back here. Remember that we have recorded under purchase journal. I forgot to tell you that we have to update as well the AP. Because in this case, we ordered something from Mess, but we haven't paid them yet. So we have to list this also in our AP subsidiary ledger. So let's go back here. So Mess Incorporated. Okay, I'll put it on both. Why? Because on September 1, if you will remember here, okay, we made purchase, okay, that we recorded in the purchase journal page 1, amounting to the total is 178,752. So now the balance, our balance, this is the amount that we have to pay Mess Incorporated, okay? The amount is 178,752. We have to update this as well. Same with AR, right? We have to update the AR subsidiary ledger. Okay, I hope that is clear. Now let me go back. I believe we're here already. In this case, there is a receiving report that we issued. Okay. So here is our report. The customer here is Rainbow Incorporated. So meaning, okay, let me just take a look at the invoice. Okay, sorry. I believe we stopped here. Okay, receiving report September 4. Okay, in this case, we are the customer and Mess issued us the receiving report, meaning they received a certain amount of goods from us. So we returned the goods or the inventory to them. So in this case, where should we record this? Okay, so where's the, okay, adjusting entry. All right, so if you will notice, this is recorded under general journal. Why? Because it shouldn't be recorded in revenue journal. It's not a revenue. We return the goods to our suppliers. We did not acquire a new set of goods. We returned it. Okay? It's not, there's no cash receipt from our end. Okay? We did not also pay anything. We just basically and technically returned the goods. So in this case, it's not in the revenue journal, not in the CRJ, not in CDJ, not in PJ. We have to record it then in general journal. Now take note that all these transactions that are not dated September 30 should be recorded in the general ledger. They should be posted under unadjusted trial balance. I'll later on explain that to you. Okay, let's focus here on this transaction. AP. Okay, so since we ordered goods from them and we haven't paid them yet. Okay, so that would be merchandise, debit, and then credit, payable. There's a liability in our part. Now, for since we return the goods, the suppliers, our payable should be deducted. Okay, so here's the amount debited. Of course, the PR or the post reference should be here as well. 281 is here. Okay, AP. And then the amount here total is 29,792, and then we have an additional account titles, namely purchase returns and allowances, we use this account titles to record all the goods that we return to the suppliers. Okay, input VAT, as you can see in the breakdown here, we debited it. Now we're trying to um put it on the credit side to decrease their amount. Okay, I hope that is here, and we have the explanation here to record goods returned to supplier MEC or MES Incorporated. So do not forget to put all the PRs here, which you can find here. So debit should be balanced to the credit account. Okay, 29,792. So this is how we record the return goods. We debit accounts payable, so we decrease the amount that we need to pay to MES, right? Just like in your personal transactions, if you owe someone 10,000 pesos and then you return the 5,000 pesos, of course, you will only return the balance, the 5,000, right? So we have to update it. Okay? So in this case, we have to update as well the accounts payable ledger because the account AP or accounts payable has moved. Okay? It has been decreased by an amount to 29,792. So let me take a look at here. Okay, we have to record it here. So instead of us paying them 178,752, but since we returned some goods, now our balance is only 148,960. This is the only amount that we need to pay for them since we returned some goods. I hope that is clear. Okay, and then where did we record it again? GJ1, General Journal, page 1. Okay, again, if you don't get it, you can pause this video, try to digest everything, or play it back. Okay, based on your own pace. All right, so next, September 5, we have, okay, again, we are the customer. So we purchased another set of goods, but we did not pay the NI Incorporated. This is one of our suppliers. So September 5 here. Okay, invoice number is here. Okay, the purchases amounting to 239,400 in input VAT total is here. And then of course we have to update the AP again. So 9 incorporated September 5. So this is another purchases. We recorded it in PJ1, right? Earlier here, PJ1. And then credit is the total amount, and then the balance that we have to pay them is this one. Next, so I believe we paid the, who did we pay here? Okay, we issued the check. Okay, Office Equipment Center. Okay, we bought something. So we're done here with NBA Bookstore. So we're now here, September 5. We bought office equipment. So just put the date here, check voucher number, check number. Take a look at the columns here. Check voucher number is different from the check number. Check number, you can get it here or here. Where is it? Check number there, here. Check number is here. It's also here. And then the check voucher number is here. You have to put all the details required based on the column side. So F account debited. So office equipment, we paid the check to Office Equipment Center. And then if you will notice, there's no account here for office equipment. So we have to put it under sundry account. Again, if you're not familiar with this one, please watch the first video I prepared so that you know the meaning or explanation for this one. Sundry debit, so 7980 and then plus VAT 957, total of 8937.6C. Don't forget to put the PR so that we know that this account is pertaining to office equipment 122. Okay, next. So another payment that we made last September 5, JBD Royalty Corporation. So we have to put the date here again, check voucher number, check number. We paid it to JBD Royal Realty Corporation amounting to 30,300 for rent expense. Okay, 706 here. We have the rent expense. We have to use the 706 here, amounting to 13,300 plus the withholding tax on the credit side because it has a parenthesis here. Look, it's payable. Okay, on the credit side, and then the total amount is. Make sure you have the correct balance, okay? 12,635. Next, we have September 6th. Another receiving report, but in this case, we are the one who issued it. We received the goods from our customer Rainbow Incorporated. So that means it should be recorded in adjusting entry because it's not a revenue. Okay, it's not an additional revenue. There's no cash received from the client because Rainbow um acquired some good from us and then they haven't paid us yet, so we have to update everything here. Okay? So let me just okay. By the way, I don't think I was able to discuss this one. So let me just go back for a moment. So we have discussed September 3 already. I'll put it on bold. So September 3 invoice number that we issued is 7981 for the client Rainbow Incorporated, amounting to here. Let me just go over here. Again, 199,500, 23,940 for the output VAT, and then 20 223,440. Okay, all right. So do not be worried because all the breakdown amounts are reflected already. Okay, so I forgot to mention that we have to update as well the AR subsidiary ledger. Again, revenue journal. We provided the service already, but the client hasn't paid us yet. So AR, we have the September 3. Okay, we recorded in RJ, right? Revenue journal, page 1. And then the amount is 223, the total amount. Okay, and the balance, we have the same amount. Okay, now let me go back to the general journal. So we're done here already. Let me put this on bold. Same here. Okay, in this case, we are the one who issued the receiving report, meaning our customer returned the damaged merchandises, okay, to us. So instead of recording it in our, revenue as sales, okay, we have to decrease our uh, accounts receivable. Okay, since they owed us a certain amount, we have to deduct it as well because they returned the goods to us. It's not correct that we ask for the whole amount, all right, when they return some good to us. Okay, in this case, we debit. Okay, memorize this one. Sales return and allowances. Let's take a look at the account title here. 548. Okay, that's the account we generally use if our client returns the goods to us. And of course, the output VAT that we recorded, 26,63192, it's here, and then the total is 29,792. And then of course, the explanation, and then the credit side accounts receivable. We no longer have to um ask for this amount from them. So in this case, you have to update as well the accounts receivable ledger. So in this case, September 6, to record we have to deduct the AR from this client. So they have the balance of 223,440, but we have to deduct it by 29,792. Now their correct balance is now at this amount. Okay, I hope that is clear. So we're done here now. Next, we have September 8th. Again, we purchase another set of goods from You Incorporated. So September 8th, invoice number is here. Account debited is You Incorporated. We are the customer. So we bought 93,100 plus VAT. It's also here. Total amount is here as well. So since we purchase on account, we have to update as well our AP subsidiary ledger. So this one is beginning. It's already given once your tax assessor distributed your packages or your problems. Okay, You Incorporated, we have to update it September 8th. Purchases, we recorded it in PJ1 earlier, right? And then the total amount is 104,272. Okay, next, official receipt. Okay, we issued an official receipt to our customer. So that means we have to record it in our CAJ. So I'll highlight it here. Okay, September 8th. OR number is here. That's COD. And then account credited is here. Happy Trading Incorporated sales is here. 172,900. Output VAT is here. Total cash debited. Total cash that we received 193,648 pesos. There's no sales discount here in the breakdown. So let's just take it as is. No need to record or update in the AR as well because we did not record anything here. Plus, we provided the goods to them and they paid us right away. Okay. Next, we can proceed on September 10. Okay, in September 10, we have issued the this particular invoice to another customer. Okay, Moon Incorporated. So this is a revenue on our side, September 10. And then we have to record it here, September 10. Invoice number is here as well. Okay, Moon Incorporated. And then 133,059.60. The breakdown is here. And then accounts receivable. Okay, so since this is an AR as well, let's update the AR subsidiary ledger for Moon Incorporated. We have here September 10, we recorded the sales in the revenue journal, page 1. Amount is 148,960. Now the balance is this one. Next, we issued check again. So this should be recorded in the CDJ. We paid something. So September 10, okay, check numbers here, check voucher number, check number is here as well. The name, to whom did we pay this check for? BIR. By the way, in assessment, you can just type it in here, BIR, for a shortcut, okay? So it won't be time consuming. So what did we pay for? Withholding tax, okay? Okay, take a look at this. There's no parentheses here. That's your sign already. You don't have to put sign here. I mean, parentheses here. It's on the debit side. Okay, 1064, meaning it's a deduction. Expanded withholding 665. Okay, total 1729. Next, we have another payment that we made for SSS PhilHealth and Pag-ibig. Okay, same here. How much is the total amount that we paid? 2726.50 plus 4655. Total of 7381. So we release an amount of 7381.50. Next, payment slip. Yeah, this serves as the OR for the SSS. Next, we have paid the utilities. September 10. Here's the check voucher number. Check number is here. We paid who? Tubig Nihit Cooperative. So it's under utility payable. 286 payable here. 1064. It's a consumption of water. Total payment is 1064 as well. And I believe there's another one. Okay, Corriente Nihit Cooperative. Another utility last September 10. Check voucher number is here. Check number. The name to whom did we pay the check? It's also here. So it's also utility payable 286. It's here. And then 3990. Okay. The total here is 390 cash as well. Okay. Why are we putting it in the sundry account? Again, if it's not reflected here, the account number is not reflected here on the column side, we put it here in the sundry account. Okay, once again, you have to put the corresponding post references so that we know which accounts these amounts pertain to. Next, September 11. So we issued an official receipt. Okay, in this case, we received the cash payment from, okay, Rainbow Corporation. Oh, Incorporated. Dated September 11. OR number is 2663, 7981 invoice. And then Rainbow Incorporated. Accounts. Okay. All right. So in this case, the amount is 193,648. Why? Because initially, okay, they purchased 223,440 to us, right? But then they have returned the they have returned the goods amounting to 29,792. Now we only have the balance of 193,648 from them. And then they availed the sales discount. Okay, based on here, this should be deducted as well to the amount that they will pay us. So the total of 190,000 190 pesos. So if you look at this one, AR credit rainbow, if you take a look at your AR, that's also the same amount that they should pay us here based on the balance. Okay, I hope that is clear. So let me just go back to the CRJ. So there. That is why we have the AR credit here because this is the only AR that we have against them. Okay, and then they availed the sales discount. So meaning we have to deduct it as well. Next, we have September 15. We issued another invoice to our client, Star Incorporated. So we have this one, right? It's just the same process with partnership service, although there are additional accounts, but still the same, right? So September 15, here's the invoice number, Star Incorporated. If you notice the series, it's still in series, but there's no 7982. That's okay, as long as it's in sequential form. Star Incorporated amount here is 239,400. Output VAT is here. Okay, and then total is 268,128. So in this case, we paid for the payroll, check check voucher, and then the receipt or the payroll summary. So we paid last September 15. Check voucher number is here. Check number is here again. We paid to cash the name of the employees amounting to salaries expense. Take a look at the columns first before recording to sundry because some of you are recording directly under sundry debit account. Do not do that. Please check the columns first. Okay. If you see, okay, there's an account salaries expense, I'll record it here. So that's correct. Okay. So yeah, we have 3192, 920, Pag-ibig and PhilHealth amounting to 266 plus 997.50. We have to total it here because it's just under the same column. Okay, balance, are we balanced here? Okay, 30,655.50. Excuse me, next. Okay, the OR should there should be OR for Much Incorporated as supplier. So in this case, there's an error here. There should be an OR here. Okay, but in this case, we should record it under. Okay. Mm, yeah. Okay, this one is under payroll. So we're lacking for the additional. Hmm, check voucher. Okay, September 16. Hold on. Okay. All right, so if you will notice here, there's an error. So there should be an OR here reflected for Much Incorporated. So in this case, we paid Much Incorporated, and then the name Much Incorporated should reflect here as well. So if you notice, September 16, we have Much Incorporated. Check voucher number. Check number is here. Much Incorporated. We paid it by check, and then 281. So that means it's an accounts payable. Okay, and then the total amount we paid is 39,900. So if you will take a look at the AP subsidiary ledger, we have to update it as well. September 16. Okay, we paid it via cash. We recorded it in CDJ1. We debited the AP, and then so initially we have the balance 39,900, and then we paid them already. So that gives us a zero balance amount. Okay, I hope that is clear. So just imagine we have the OR here from the Mansion Corporate. Okay, September 20, we paid again. Here. One of our suppliers, not incorporated, dated September 20. Check voucher number is here. Check number is here. Account debited to Night Incorporated based on this one. And then another accounts payable debited amounting to 268,128. And then, of course, they availed the discount. So we have the purchase discount. We availed the discount. So we have the purchase discount. So we have to deduct this amount to the amount that we owe to them. So the total amount or cash we release is only at 265,734. Okay, we had the purchase discount, remember? Okay, and then we have the official receipt issued to one of our clients, Moon, so we have to record it here. Okay, and then dated September 20. OR number is 2664, invoice 7983. Okay, client name is Moon Incorporated. Accounts receivable initially. We owe them 148,960, and then they availed the discount 2660. So they paid us 146,300. So we have the AR here. Again, we have to update the AR subsidiary ledger. So the name is Moon. Okay. So here's the account. They paid us cash. We recorded it last September 20 in CRJ, and then we deducted 148,960. So initially they owed us this amount, and then they paid us the same amount. Okay, that gives us the zero balance amount from there. And okay, so next we have September 22. We issued an official receipt to one of our clients as well, Sun Incorporated. So September 22, OR number is here, invoice number is here as well. Sun Incorporated, name of our client, breakdown here. So 33,250, the amount we received from them. And then we have to deduct it in our AR subsidiary ledger. Okay, we go to the ARSL. Okay, Sun Incorporated here. So initially they have the beginning balance, 33,250, but since they paid us, by the way, again, this beginning balance is already given once your test assessor given out the problems or package to you. So September 22, we have to update it. They paid us cash. We recorded it in CRJ page 1, and then we debited accounts receivable. Now it brings us a total amount of 0. Okay? September 25, CDJ. So we issued the check. So it's a payment from our end. We paid SO Incorporated September 25. So we paid our, okay. So we paid purchases. Okay, 39,900. And then input VAT is 4788 and 44688. So in this case, we did not owe any amount to SO Incorporated. So let's take a look at the AP subsidiary ledger. So that means we no longer have to update this one SO. So see, there's no list of SO here since we have paid them right away, meaning we purchased goods from them and we paid them right away. Okay, I hope that is clear. Next, we have September 30. So we paid again MES Incorporated. So dated September 30. Check voucher numbers here. Check numbers here. MES Incorporated. So accounts payable debited. So we have to deduct it in the amount that we owe them. The amount that we pay them is 148,960. So we have to update the AP as well. MES is here. We pay them cash. Recorded it in CDJ page 1. We debited 148,960. That brings us to 0. Okay. Next, we paid again for the payroll, of course. September 30, check voucher numbers here, check numbers here. Cash, we paid it to cash, the employees. So the breakdowns are here, 3192, SSS Phil Health, parenthesis, okay, so it's on the credit side. Total is 1463. Withholding tax is 1064. Total payment that we made is 2993. 29393 rather. Make sure that all the debits and credits are balanced. Okay? So next, October 5. So in this case, I would highly suggest that you recorded it in the GJ right away. But if not, that's okay. Because the amounts to be reflected in the worksheet unadjusted should not reflect this amount yet. Okay, this will be under adjustments. So for me, I would suggest that you record it in the for the assessment purposes, you record it in the general journal already. So in this case, let me show you how it is being recorded. Just like the previous discussion that we had for partnership service, it should be recorded under. This one is a payment It's not actually a payment. It's an account transaction that we need to record in the books of September. That's why although it's dated October, we should date it under September because it's an expense. It's a utility expense, right? Electricity. It's a utility expense that we incurred for the month of November, September. So we have to incur, record expense, debit utility expense, memorize this one, and then credit utilities payable. Then the explanation to record accrued expense. And then the account numbers are here, 708. It's here. And then accounts payable, 286. It's here. Okay, do not forget to put all the PRs here. So we're done here, amounting to 4655.50. So the same case here, although this one is different because it's for the electricity, this one is for water rather. So the amount is just the same, account titles are just the same, utilities debit, credit, utilities payable, and then the explanation to record accrued expense. Or maybe you could just type it in there to record electricity, to record water consumption. You can do that as well. Whatever works for you guys. So PR, do not forget. Don't ever forget because it will give you more deductions in the assessment. Okay, and that's not what we want to happen here. Okay, amounting to 1330. Okay, for this one, it's just a recognition of the amount that we have to pay for SSS, PhilHealth, and Pag-ibig. If you notice, there's no OR here yet because we just prepared or reserve a specific check and check voucher for this transaction, but we haven't paid this one yet. So it's not yet deducted in our bank. But for us to record it, debit, if you'll notice, it's just almost the same, right? This one is SSS PhilHealth Pag-ibig contributions, while this one is SSS PhilHealth Pag-ibig contributions payable. This one is an expense account. This one is a payable or liability account. And then we have the explanation here. So the account numbers is here as well. Just take a look at this list. Okay, do not forget the PR, and then the amount is here. And then you're done. So of course, we have the retained earnings. If you will notice at the beginning, you have the retained earning here. Okay, 39,900, which should be a cash dividends payable. So we have to adjust it as well. This one is another adjusting entry that you need to memorize. Okay, during assessment, if you will have the merchandise corporation. Take a look at the retained earnings amount here, debit retained earnings, and then credit cash payable. And then the explanation to record cash dividends. So for us to recognize how much do we owe in terms of cash dividends. Okay, so this is 39,900 pesos based on the accounts. Okay, so the account numbers again are here at the chart of accounts. Just take a look at it. And then, of course, the depreciation expense. If you notice, we don't have the percentage tax expense anymore. Okay, so in this case, we record the depreciation expense for the two assets that we have. Remember, we have store equipment now and then office equipment. Before, we are only recording for office equipment, but this time it's two. So we have depreciation expense for both of them. It should be separated. So store equipment and then office equipment depreciation expense, accumulated depreciation for store equipment and for office equipment. And to record the explanation, to record depreciation of assets. Once again, the accounts are here. Please do not be confused. It should be 720. It's here for store equipment, 721 for office equipment. Same here. Accumulated for store, accumulated for office equipment. And then the amounts are computed as follows. So based on the information, 10% per annum based on store equipment. So if you will take a look at your GL, okay, the beginning balance times 10% divide 12 to get the per month. So what is that again? Store equipment here. 159,600. So if you will take a look at the formula, GL G38 times 10. GL G38 times 10 and then divided by 12 to get the monthly. Okay, and then same here. Okay, GL 51 times 10 divide 12. 122. Okay, divide 12. So here, where are we again? Okay, so yeah, I think we could proceed now with the We're done with the general journal. So make sure that you have 1, 2, 3, 4, 5, 6, 7 transactions under GJ if you are answering merchandise corporation. So memorize everything so you won't forget it. Okay. Once you're done with journalizing transaction, you can now proceed with the posting of transaction in the ledger. It's kind of tricky, so you really have to listen to me. So let me just go over the worksheet. Let's focus first on the adjusted trial balance. I'll highlight it in yellow for the meantime. Okay, and I'll go over. Oh yeah, sorry. We have to go first for the to the GL. So once you're done recording everything here, let me check if we were able to bold everything. Okay, the AP side, the AR side. Okay. For this one, oh, I think I forgot to explain this one. But remember, Night Incorporated, September 20, we paid and recorded it in CDJ amounting to this amount. Okay? So it's this one. All right. So now once you're done journalizing everything, you have to sum up everything per column. For CDJ, okay, per column. Here you go. Okay, and then once you're done doing that, make sure that they all amounts or all totals should have their own post references based, of course, on the account titles here. Okay, if yeah. Okay, and then here as well, and then same with revenue journal. Okay, sum up everything. Okay, and then put all their corresponding post references. Same here and same here. Just do this the same things, guys. Okay, once you're done, sorry, once you're done with that, you can now proceed with the posting. Okay, so you have to first, the tip here is you have to post transactions in the first account first. So you'll have to go over the cash first, and then let's see if you have the AR as well, the inventory, the input VAT, so on and so forth until you reach the last account here, which is income tax expense. Okay, so cash, how many 148 do we have here? Of course, we have in cash receipts. So 148. Okay, and then here we use the September 30. The date September 30 collections, we recorded it in CRJ. Okay, now the balance beginning is 266. Normal balance of cash is debit, so we debited an amount, so it's an addition. Okay, next we have CDJ. 148 as well. So it's a disbursement. So it's on the credit side. Now it brings us to the balance of 232,085. So this is the balance. We disbursed, recorded it in CDJ page 1. So it's a deduction. So initially we have this, but since we deducted this amount, it should arrive at this amount. Okay? Next, 150 AR. So 150 AR. Okay, so we recorded, remember, in in GJ. So, like, let me take a look at this first. Accounts receivable here, 29,792. So, it should be posted as well. So, 150. Okay, date is 6. Okay, we're done here. So, here. And then for revenue journal, we have 150. So, we have it here. Okay, September 30 sales recorded in RJ1 amount is 640,528. This one. Okay, and then the balance now is this one. Next, we have cash receipts. KAR, there we have it. So it's a credit on the credit side. So September 30 CRJ credit side, it's a deduction because the normal balance of AR is debit. We will deduct because we credited this amount. So now the total balance is this one. Let's take a look at the merchandise inventory 153. 153, 153. Okay. Do we have any merchandise inventory here? 153. I think there's none. Okay. So for this one, input VAT. Okay. Input VAT. So we have this here. Take a look at this one. I am recording all the transactions under adjusting entry as long as it's not dated in 30. It's not in a closing entry for this one. So this should be under unadjusted still. Okay? So we recorded September 4 for input VAT. So how much? 3192 credit. Credit side, we recorded it in GJ, September 4. Okay. Normal balance of input VAT is debit. So the balance is 15. Now we will deduct 3192 to arrive at this amount. Okay, I hope that is clear. What else? Okay, do not post yet the GJ1 dated 30. Okay, September 5, CDJ, office equipment, 122. Okay, September 5. So we have an amount to 7980. Okay, debit side. So debit side. So this is the balance, beginning balance. We have an additional office equipment. So we have this amount. Accumulated depreciation. Do not mind yet the 30 September. So you won't be confused. We'll go over that later. Okay, next is accounts payable. For the accounts payable, okay, we have CDJ here. So we have September 4. September 4. Oh, yeah. It's in the general journal. So September 4, accounts payable deducted to. It's a purchase return, so we have to update it. Again, it's under GJ. It's an adjusting entry, but it's not dated 30. So you can already post it. Okay, I hope that is clear. September 4, purchase journal, GJ1, 29792. It's here, debited. So accounts payable, normal balance is credit. So by the way, class, in your national assessment, please make sure to put parentheses to all liability accounts. In this one, I forgot to put the signs here, parentheses. So make sure you have yours, okay? The total amount now is 10,108 since we deducted the amount of 29,792 already. Next is withholding tax. There's no record. SSS, okay. Suppliers payable. Utilities payable. 110. Okay. 110. Oh, yeah. 286, rather. 286. It's here. Okay. So in this case, we have already added the amounts here. So 5054. Initially, we have utility payable, but we paid it already. That brings us to 0. Next is 290. 290 GJ1. Okay, 290, or do we have 290 here? Hey, here. So output VAT is debited. So debited output VAT. In this case, output VAT's normal balance is on credit. That's why we have the negative sign here. Since we have no balance, but we have debited an amount for output VAT, so we have to put it on a negative sign. Cash payable, okay, not yet. Ordinary share, okay. Retained earnings, not yet recorded. Income summary, not yet. Okay. Sales return. We recorded here. GJ1. Okay. September 6. So sales return and allowances, 26,600. Just basically make sure all the PRs are recorded to their corresponding debits and credits. Okay, that's how you do it. You record everything from GJ1, okay, for all those transactions not dated in 30. Okay, but you can actually already post this for assessment purposes, but in terms of the worksheet, all the amounts with balances before the 30, those are the amounts you should encode in the unadjusted. And then the adjustments are this amounts, and then adjusted trial balance are those, combined amounts, unadjusted and adjustments. Okay, so I hope that is clear. So let's go back. Once you make sure that you've already posted everything, all the accounts here, the credit and debit sides are here. It's already indicated credit or debit. So once you're done posting everything from revenue journal, purchase journal, cash receipt journal, CDJ, and then general journal, okay, you can now prepare the worksheets. So in terms of worksheets, okay, for the unadjusted trial balance, you have to put the amounts before the GJ1 dated September 30. Why? Because if you will look at the GL, we have GJ1 but recorded in the unadjusted. Example. Hmm. All right. So for cash, let's later on discuss the GJ part. Okay. So for cash, we have the amounts 232,085. Account receivable is 262,128. For merchandise inventory, 133. Why? Because we're not at thought. These are closing transactions. Assuming that we haven't posted this yet. Okay. So input VAT 77. Okay, so we have 77 here. Okay. Assuming we have posted everything from PJ, CDJ, RJ, CRJ, and then GJ1. Store equipment, we have 159,600, and then accumulated depreciation 10,064. Why this one is not yet recorded? Okay, make sure that those account or balances recorded in unadjusted trial balance do not include the transactions under GJ1 dated 30. Okay, so in this case, this is the transaction before that exemption. Okay, so 10,640. Office equipment, okay, 115,710. This one is accumulated depreciation 7,182. Accounts payable is just this one. 104,272 here. And then 1064, 1065 here. Okay, 665 is here, expanded. SSS 7381. Oh, it's 2726.50. It's Take a look at this one. Focus here. SSS PhilHealth and Pag-ibig. Why I did not include this one? It's dated September 30. Okay, it's just the same here. Why did we not include this? Because this one is an adjustment. It should be recorded here, okay? Not under unadjusted. Why is this recorded if it's dated September 30? Because it's recorded in CDJ. It's not GJ. The only thing that we won't be recording under unadjusted trial balance are the accounts dated September 30, GJ1. Okay, I hope I was able to make myself clear here. Okay, so in this case, 2726.50. It's the transaction before the September 30 transaction, GJ1. Okay, this one. Next, utility payable. Okay, next, 2860. We don't have, okay. Utilities payable. Okay, I'm not sure. Okay, let me just go back here for a while. For output VAT, Okay, we have 86. Okay, so for utilities payable, now I get it. Why there's no amount here? So the balance here is, okay, CDJ, okay, before GJ1, dated 30, so the amount is 0, beginning balance. Output VAT is 86.84, cash dividend payable is 0 as well. Because this one is GJ130, it should be under adjustments, okay? Next, ordinary share capital, 399, return earnings, 244. What else? Income summary is 0 because these are already post closings. Okay. Next, sales, of course, we have 744,800. This one before anything. Okay, sales returns, we have 26,600. This one is dated 6. Although it's from GJ1, it's recorded still under unadjusted because it's dated before September 30. So this one is included. Sales discount. Okay, we have 6118. Purchases 532. Okay. Purchase returns and allowances 26,600. Purchase discount is this one. CDJ 30. Okay, salaries expense CDJ. Okay. This one is GJ, so it's not included. Dated 30. So this one is included September 5. Rent expense. And then, okay, all GJ, CDJ. Last one. Okay. So we're now able to complete all the amounts under unadjusted trial balance. I hope you were able to memorize it, okay, or at least familiarize yourselves to the amounts recorded only in unadjusted. For the adjustments, okay, we go to the general journal. So everything's recorded here should reflect here. So 1330 for accumulated, and then 96425, 4655 utilities payable, 1795. Where is it? 1795 utilities payable. So here the total is 1795. 39,900 is here. 39,900 on the debit side, 4665 here, 1795. These two combined, 133 and 964. If you have balances here, you should arrive at the same amounts here. So here are the adjustments. When you adjusted it, we have the adjusted trial balance. Okay, debit. So let me just put this one on full screen. So debit, just copy paste everything here. There's no adjustments made. In this case, accumulated depreciation, we have an adjustment. Normal balance of accumulated depreciation is credit. So we credited an amount, so it's an addition. So in here, beginning balance, and then here we have adjusting from 7182 plus 964, it becomes this amount. Then the rest, just copy paste it here. Okay, but for this one, we have an adjustment from 2.7, it becomes 4.6, total of 7.3. So here, zero balance plus adjustment and then the adjusted. Okay, so please be informed about the normal balances of this account so you know when to add it or deduct it based on the adjustments. Okay, so 39, 39. Okay, ordinary share, just bring the value here. You have an adjustment. Ordinary share, so 244 minus 39 equals 204. No accounts here. Sales. Okay, so we have sales returns and allowances, purchase returns and discounts, and then all the expenses are here as well based on the adjustments, and then we have the summary of the accounts, debit and credit should be balanced still because you have the balance amount under unadjusted, you have the balance amount in adjustments, so you must have balance amount in adjusted trial balance. Okay, so for the income statements, just the same process. So you get the sales, and then you have to deduct, of course, the sales return, right? And then sales discount. So it should be included here. And then we get the purchases, the purchase returns and allowances, purchase discount. Why? Because in merchandising, aside from the normal operations expense, we also have to deduct the COGS, cost of goods sold. In order for us to do that, we have the merchandise beginning, we have the merchandise ending, okay? Beginning plus purchases. Let me just break it down here. Let's just say merchandise inventory beginning plus purchases. This is how we compute for COGS. You can even search online how to compute for COGS so you won't be confused. Less purchase returns, oops, less purchase discounts, okay? So those are the amounts. And then less the merchandise inventory end. This one is the beginning. So that you will know how much did you sell, okay? Cost of goods sold. Initially, you have the beginning inventory, and then you have additional purchases, but you have deductions like when you return the goods, purchase returns, purchase discounts, and then you have the ending. So that means these are the amounts that we have been able to sell in the market. Okay, that's how we compute it. That's why in income statement, we will include the balance 133, and then where did we get this? If you take a look at the problem, it's here. The ending balance is 159,600. Okay, so that's the amount here. Okay, that's why in the income statement, the computation should include all this. Beginning, ending, purchases here, okay, and then the discounts and all the expenses. Because the COGS computation should be deducted in the sales as well. So you have the credit side 93,394. You have the credit side this one. The amount of net income is 14796.25. Are we balanced? Yes. Okay, bring down the totals. Okay, by the way, we use peso sign in all for first line items. Okay, across journals, ledgers, worksheets, financial statements, ledgers, general journals, etc. First items and then the totals with peso sign. For the balance sheet, it's just the same process. You have to copy paste all the assets, of course, the contra assets here, all the liabilities, and the, of course, ordinary share capital, and then the retained earnings. So debit and credit, it will not be balanced, but the difference should be the net income. Are we balanced? Yes. So once you're done with the preparation of worksheets, it should now be easier for you to prepare the financial statements. So let me take a look at the financial statements, and then let me just split it into two screens so you can see how it works. So again, our flow is we prepare the statement of comprehensive income first. In partnership service, it's statement of income statement of financial performance or income statement. In corporation, we use statement of comprehensive income. So in this case, we have to compute for the sale. It's just basic. Use the sale amount that you have computed here in the income statement. Okay, of course, you have to deduct what should be deducted. Of course, the sales return and then sales discount. The total deductions are this one. And then sales minus this one is this one. Okay, I hope that is clear. Next, for us to compute all the amounts should be deducted. We have to compute for the COGS, which I mentioned earlier. So how do we do that? So you have the purchases here, right? You have the purchases here. Okay, it's here. And then all the deductions, 260, 26,600, 2394. Okay, net purchases. Okay, the total deductions are this. And then net purchases is this one. Okay, the beginning we have is this one. Ending. So we now have the total cost of goods sold. Okay, by that, we can now able to compute for the sales minus the gross profit. So for the gross profit, here's the formula. Okay, this one less this one equals 235. And then we have to deduct all the expenses, operational expenses, of course. Okay. Total operational expenses is this. So here's the gross profit less this one amounting to this one. So we're not able to compute 147,796.25. Are we balanced here? Yes. So this is the amount that we will bring over to the preparation of statements of stockholders' equity. So in this case, it's just almost the same format with the previous one that we had in partnership service. But this time we have the ordinary share capital. It's not per partners anymore. And then we have the retained earnings and then stockholders' equity. So in this case, we have the beginning balance of 399. So let's take a look at the worksheet. So we have 399 ordinary share capital beginning, but the retained earning we have here 20. I mean the unadjusted is okay here because this one is the adjusted already, right? So beginning balance is 244,653. Total is okay, and then we have the net income that we've computed from here. It's already in formula as well, and then total here, and then we have the dividends payable, okay, and then dividends payable here, and then here's the balances. Okay. We have to just the same formula. Beginning balance plus the net income, or in case net loss, we have to deduct it. In this case, it's an addition. You have to deduct as well the dividends payable, and then we get the total amount. So the total stockholders' equity now, beginning plus the retained earning of this one, total of 751,549.75. Okay. That's also the same amount that we will bring here. Okay. It's this one. So yeah, we'll start from the top. For the statement of financial position, all the accounts on their balance sheets. Okay, current assets we have cash. Okay, inventory, AR, merchandise inventory. We have to put the ending. Of course, these are the remaining available. Okay, inventories or goods. So we have to put this 159,600. Total current assets are this. So what about the total non-current? So we have stored equipment less the accumulated. Okay. So total non-current, so meaning you have to add all the assets first, deduct all the accumulated to arrive at this amount. So when you total everything, total current and non-current, it should balance with the total liabilities and equity. So liabilities, it's here also accounts payable. Where is it? Here. 104, 1064, 665, 7381. I'm talking about here. 1795, 39. Okay, so in this case, why is it 8379 only? Because we deducted already the output and then the input. If you will notice here, there's no input VAT already, 77825, right? Because in the corporation, this is another tricky side of corporation. We have to reflect the VAT payable only. So the output VAT is 86,184, okay, and then deduct it with the input. Output less input, that will give you the VAT payable. So you should still arrive here. Okay, the formula is here as well if you wanted to take a look at it. Okay, here's the note as well. Okay, that's why we have this amount 7381. And then, okay, the utilities payable is here. Again, output VAT is no longer here because it's computed already into VAT payable. And then cash dividends payable is 39,900. Total of current liabilities is this one. There's no total, there's no non-current, so we'll take it as is. Now, the stockholders' equity, based on our computation earlier, we have 399. And then we have 352,549, and then the total 351,549. So it should be balanced. Okay, some of you are being confused. Why is that the balance sheet, debit and credit, do not match with this one? Because in here, in the worksheet, we are computing for the debits and credits. And this one, no, it's per account. Okay, so total current assets and non-current. Total assets equals total liabilities plus equity. But in this case, just the debits and credits. That's why the totals here is not balanced here. Okay, that's the difference. So please don't be confused on that one. And then, of course, the statement of cash flow, very, very easy. Okay, so the amount here in the collection, just take a look at the ledger here. The amount of collection is this one, 563.
And then the total cash flow is here. Just basically list down everything. Here you can combine the um, similar items. You can do that. Net cash outflow is this one, the total. And then we have the collections here. So we have net decrease. Okay. The higher cash flow that we have, okay, we were able to arrive at net decrease. The beginning balance is this one. So we have to deduct the net decrease. So we now have the balance of 232,085. When you look at the general ledger, it's the same amount. Okay? That's how you check it. So now you're done with the financial statements. We can now proceed with the post-closing trial balance. But before that, we have to close everything first. And in this case, we have the amounts, temporary accounts, okay? Sales should be in credit. Now we will close it. We put it on the debit side. Same case here. Um, Sales discount, sales returns, salary six, all the expenses or have normal balances on debit. So we will close it. We put it on the credit side. Just the same thing that we did in partnership service to zero out everything. Okay, and then the balance goes to income summary. Okay, this is not that the income that we were able to compute. It's this one. How do we get this? So in this case, okay, just close the sales and everything here. Just memorize everything, okay? And then income summary. So this one, we have to close the purchase accounts. In this one, we are closing the sales and expenses accounts. In this one, we are closing the purchases accounts. Okay, we credit the beginning. We put on debit the ending merchandises. We put on credit the purchases. Okay, we basically put on the opposite sides of their normal balances. Purchase discount, debit, and then the difference of everything, okay, should be here. The formula is here as well. So total all the debits, all the credits, 665 on the credit side. Here is 188, so the balance is here. Okay, in income summary. Now, how to get the income? So we have credited the income summary here. We will debit it. Um, okay, we will show or reflect the income statement to the retained earnings. How do we do that? So if you will notice this one, we just basically deduct it. We got an income summary 624, and then we deduct this one income summary as well. We arrive at the corrected net income. It's the same thing that we were able to compute here in the financial statements. Okay. So in the income summary, we recorded in the retained earnings, not in the partner's capital anymore. So once you're done with the closing entries, you can now post it in the GL. You can now, yeah, put all the closing entries here. GJ1, 2. Okay, basically just, record everything. Closing. Make sure that you put the right amounts in the debits or credits based on the PRs. And then once you're done with that, we're able to close everything here, just like with what we did here. Closing entries are here as well. Okay, you can now prepare the post-closing trial balances. All the accounts from the worksheet or the financial statements. Look at this one. 232, 268, 159. Input VAT. Okay, it should be recorded in the closing trial balance because it should be carried forward. But in this case, it's again computed as this one. But since it's included in the computation, it should still be reflected in the post-closing trial balance. Store equipment is this one, 159,600, 11,970, 115, so on and so forth, 8164. Accounts payable, just pretty much copy everything from the AP side. Okay, output VAT is here again, and then the input VAT is here again. Okay, cash dividends payable, beginning, ordinary share capital, and then the retained earning that we were able to compute here, the updated. So now we're done with the preparation of the end-to-end bookkeeping. I hope you guys were able to learn and was able to familiarize yourselves with the bookkeeping. Okay, in terms of merchandising corporation, I hope this could help you. Let me know if you guys have questions. Please take note that in terms of the posting of transaction, make sure to post all the post references, okay, before you proceed with the worksheets. All right. So once again, thank you so much for watching this video. I hope this could help you with your upcoming national assessment. Once again, I am Gaze Getlabay, Miss Gaze. I am a chief bookkeeping trainer and currently affiliated with LaSalle and City of Malabon University. Thank you and have a great day. Bye.